Okay, I am here with Jerry Alexander, and on our Calendly link, we asked for a title, and Jerry said, "Lord Alexander, please." So
That was a joke.
that's your title. Okay, and you do a lot of different things, so maybe you're not titleable. So, welcome. You were on the podcast. I'll have to put the link to the other podcast in summer of 2021. So I couldn't believe it had been 2 years. And
Yeah.
occasionally we'll trade emails and say we need to catch up, and all of a sudden 2 years goes by. So I'm glad you're here. Thanks for doing this. And it's late for you. It's 9 o'clock.
It is, but I'm totally ready for this. I'm really looking forward to it.
Okay. Are you one of those entrepreneurs that just never runs out of energy?
I wouldn't say that. I'm probably more of an evening person. I find I'm more creative when there's no distractions and I can get on with things in the evening. Just doesn't work so well for family time, right?
Totally. Yeah, the kids in the way. Okay, so you have 3 kids. How old are they?
They are 15, so 15, 17. Oh my goodness, no. Yes, 15, 17, and 13. I missed one
Okay.
out.
Okay, good. Boys or girls?
Youngest is a girl, the two older are a boy. One's just finished school, literally today. And I said to him on the phone when I said, "How's your exam go?" "Oh, it went all right." "Okay. So what are you doing for the next 3 months?" He says, "Dad, it's 4 months and nothing."
Nothing. Uh-oh. Okay, doesn't he want to help you with the business?
Well, I did offer. Well, we do actually have a restaurant in one of our buildings, and he does work there along with his sister, actually. So he'll be putting some hours in there.
Okay, he does some manual work. I keep trying to get my 11-year-old daughter to edit my podcast. I'm
Oh,
convinced. Yeah, wouldn't that be amazing?
yeah.
Yeah, and with
I haven't
ChatGPT,
thought about that
I
one.
could write
Yeah.
my show notes, but she has resisted. I need to wait until she needs real money. At 11, she doesn't really need a lot. So I'm waiting, and then I'll get her. I figure she's so, I'm sure your kids are the same way, like so technically savvy.
Yep.
Okay, so as a refresher, and we have lots of new listeners. So first, you are also a famous podcaster, and you've been how long? You said you're on episode
180, something like that, Jamie. I wouldn't go as far as saying
That's
famous,
me.
but enthusiastic and consistent podcaster.
Enthusiastic and consistent. Okay, anybody listening who likes what I do, I think they would like what you do.
Yeah,
So
sure. Mine's a slightly different slant, isn't it?
yeah,
I'm more
yeah.
on
So
the
tell us about your business. I'm just going to throw it all in one big question, and what you talk about on the podcast.
cool. Let's do that.
Okay.
So, I basically in 2004 went from buying one or two houses and doing them up and all that sort of stuff to buying a commercial building. I hadn't planned on buying a commercial building. I just thought I need to find something a bit bigger with a bit more scale. I ended up buying, sounds a bit daft, but I ended up buying a multi-let office building which had lots of little units in, right? Sound familiar? And
Mhm.
basically, there was half a person looking after this thing, half a day a week or something. And it was basically the customers came in, they got their keys, and they just paid the rent check. And that was basically it. There was no service. And then over the years, we did it up, redeveloped it, brought in new customers, started understanding a little bit about co-working and about serviced offices. And I was still running another business. And as I was doing this thing, I thought, right, well, we're probably going to buy another one. So we went out to look for another one. The bank said, "Oh, you need a refinance, we need to revalue." They went and revalued the building. I couldn't believe what had happened to the value because it was linked to the income. I was just busy trying to make more income. So the value had gone up a lot. And that's when I decided I need to do this full time.
Yeah. Put a little focus on
Yeah.
this effort.
So subsequent to that, we've bought a few more. We've got 7 locations now, varying in different size, where we are both the owner of the building, but also the operator. And so that's kind of where we're at. And it's a mixture now of
That's why I want people to listen to you, because I love that model.
yeah. And when we last spoke about this, and I was reflecting on that conversation that the industry that you are part of in the US, a lot of it is leases and management agreements. Whereas for me, the whole thing's about how do I find a property I can invest in and create extra value? Because the income is one thing, but actually the real business is creating extra
100%.
value.
Yes. And the
So
wealth building that you can do by owning real estate.
yeah,
It's
sure.
incredible. No, I wish that everyone would do what you do.
Yeah. So my podcast is kind of really around that, but it's always linked to flex space as well, because I've just found that flex space is just
You
such
like
an
big
amazing way of
stuff.
adding the value.
Right. So you help people coach, teach, I don't know how you describe it,
Yeah,
to buy commercial property. And the extra layer is, and here's a great way to
sure.
increase the
Exactly. Yeah.
value. And okay. Yeah. By the way, your LinkedIn uh description is like one of the best and most
Oh, really?
clear. Yeah. You're probably
That
like,
sounds
what
good.
did I write?
That was about, how long ago did I write that?
Totally. And you might look at it and be like, no, I need it. Some people write these like really fancy sounding, and I'm like, no, but what do you do?
Yeah. Is
No, but
mine
what's your
third
work?
is mine third party or not? I mean, some people write it as though somebody else has written about this awesome person. Maybe I did
No,
that too.
you wrote it first person. You're like, yeah, I will. Okay, I'll read a little bit of it. Helping established residential property investors move into commercial property investment. Like many other property investors, we started off with a few residential investments, carrying out refurbishments, blah, blah, blah. After a few deals, we spotted the advantages of commercial property investment and made our first. And it's still, and then you say, it still amazes me how opaque the commercial property world is. And I was like, yes,
Yeah.
like I really think you're just being like really relatable and hitting on like pain points. And I'm repeatedly asked, how do you move from residential to commercial, blah, blah. And I just think like it's super clear what you do. And then you talk about, here's how I help people.
Oh, cool. That's great. Thanks for that feedback.
And you might feel like, oh, I want to tweak that because I do something. My podcast and social media posts are to help dispel the myths and show how commercial property investment can work for those of us who are not from a commercial or professional property background. See, totally accessible and clear. I love it.
Bro, I love that. Thank you.
Okay. Yeah. Okay. So this is so you invest, you operate, and you coach, teach.
Yeah.
Yeah.
Yeah. And and you'll be exactly the same, Jay. What I find about the whole podcasting and teaching thing is it makes you really reflect on your own business and what you're doing, because you're having to analyze what you do and how the way you think to be able to talk to other people and understand where they're coming from. And it's really valuable. And actually bringing our team into that process really helps as well, because they're forced to do the same, is to
Yeah.
think about how do I actually articulate what we do. It's great for us, great therapy.
Great therapy. Okay, I have to find my list of questions for you. They're extensive. Okay, well, so I'm curious. There's a lot happening in commercial real estate. I'm sure
Sure.
where you are is not. So yeah, tell us where you are. You're in.
Yeah. Oh, sorry. Yeah.
Yeah.
I'm over in the UK, based up in Scotland, near Edinburgh is where I am and where we invest around there.
Yeah. Okay. So what are market conditions looking like there? Are you dealing with some of the same macroeconomic high interest rates?
Sure.
Yeah,
Sure.
lending.
Yeah. Our interest rates went up again. Unfortunately, when the Fed put theirs up, our lot seemed to follow them. And I have to say, my thought on the last rate increase in the UK was just nuts. I mean, yeah, let's not get into the politics of it, right? So basically,
Yeah.
in the commercial market, I would say really there's the kind of 3 or 4 areas. There's retail, office, industrial storage, and leisure. And each of those have been affected slightly differently because of what's been going on. And we also had our own mini budget back in September, which blew the lid off of what was going on in the UK and really made the international money markets think that we were a lame duck, which put up our interest rates as well. And during COVID, retail really got hit, but it didn't really get impacted too much because the yields had already pushed out when we came around to the things last September. But the office market is the really intriguing one. I'll come back to that in a second. But the industrial and storage, I mean, it's just nuts
Yeah.
how expensive that stuff's got,
Yeah.
because the cap rates have really changed. The yields have come down, and even though interest rates have gone up, they haven't affected it as much as you would have expected. They are starting to stretch a little bit, but it's still really expensive. But office space, it depends on so many factors. Where you are,
Okay.
right? The customer or a target market. Is it in the city center? Is it in a local demographic, in a local market, sorry? Is it quality space? Is it poor space? What's the square footage that you're letting? Is it a small space? There's just all these little levers that pull in the market. So if you look at the macroeconomics and talk to some of our agents, some of them will be telling you, yeah, you don't want to be investing in office space. That's
Mhm.
not a great market. Why
Right.
would you be doing that? You should be investing in industrial. And you're like, yeah, but the return's terrible.
Right. Yeah.
Um, but in the office space, it's those levers that I think a lot of people forget because they think it's all down to location and price, but it's not, is it? I mean, apart from hospitality and all the things we talk about in co-working, it's just the thing about, well, what's the contract like? What's the, is this something where somebody else is responsible for everything, or am I as a tenant responsible for everything? So then how long am I allowed to be in this space, and what's the size of it, and what's the quality, and what's the environmental, there's so many layers
Yep.
that actually, when you start looking at it as an investor, although the market is in a bit of turmoil, it's just understanding those levers so that when you're looking at your local area, you really focus in on finding where the gaps are based around those parameters. And it's not just that that location and finance thing, or rent. It's actually about those different things I was talking about, which of course feeds a lot into co-working spaces because
Mhm.
they are that much more flexible. So
Yeah.
the market's in a bit of turmoil. It's still opaque. But that does mean that opportunity tends to be invisible, but right in front of your face.
Okay. So are you optimistic for investors looking at commercial and thinking about doing flexible office space?
Yeah, sure. The only challenge in the market right now is raising finance,
Yeah.
because interest rates have changed
Minor
because yeah, there's minor challenge, right? I mean, there's ways around that, but
Yeah.
that's a bit challenging. I mean, of course, the thing is, what it does is deflates prices too. So
Okay.
if you're trying to get in the market, that's better, but you need some money. But I think the opportunity is fantastic. And what's interesting is that if you're looking at a local market and you're thinking, well, my town is not necessarily growing, I'm not sure this is a great market to invest in. It's not about how big the pie is, it's about how big your piece is. And if somebody else is not creating that more modern offer, then the supply is really restricted. And that's probably an area you should have a look at.
Yep. Yep. No, I think that's super important insight. Okay, so folks that are sort of working with you on, these investment opportunities, yeah, I mean, how are you helping them think about the market? Give me a little more granularity on that.
So the first thing is to work out what they want. So it's back to basics, right? What are
That's
you
the
actually trying
hardest
to do
part.
here? Yeah, yeah. What is it you're trying to do here? And a lot of people answer with a dollar sign, and you're like, well, that's not always going to get you through some of the tough stuff. You got to work out what you want, because when you do that, you can work out, for instance, if you want to be a more traditional investor where you're just buying passive income,
Yep.
you're just buying income, or you want to be more creative and active. And if that's the case, well, then that changes the type of investment you're looking for, right? So it's working out what you want,
Okay.
then decide on the type of investment. And from that, my suggestion is always just really focus in on a specific geographical area, because the only way you're going to understand what's happening in that market is by studying it. And if you're looking one day in Ohio and the next day you're looking over in California, how are you ever going to understand what's going on in the local area, because you're
Yeah,
just
yeah,
skimming over it? So
yeah.
it's really understanding what's going on in the market. Go and have conversations with agents. Remember to ask questions when they deliver you an answer, though. When they say to you, oh, I wouldn't invest in office space or self-storage, you've got to ask more questions. Why? What type of office space? Or if I was to bring you the perfect office space for your customers right now, what it would look like, what would it look like? And they might give you a positive answer, but actually what they've been telling you before that is, oh, I wouldn't bother. So it's basically getting under the hood of a local market and really focusing in, and then thinking about those levers about size, contract type, quality of the space, and then ultimately, yeah, it comes down to price. But those other things tend to affect price, right?
Yeah. So quality of space, because you mentioned like sort of redevelopment. I mean, do you help people kind of look at that opportunity, or like do you steer people towards already high quality space, or do you steer people towards space that could use work and is an
That,
opportunity?
that's a great question, Jamie. Personally, we've only ever built extensions. We've never built new build.
Yep.
I could go into the numbers, but I just think when tough times come, if you've invested up at this level, you've got no room for maneuver,
Yeah.
and that's difficult. But we tend to buy old stuff. The reason we tend to buy old stuff is often it was built for one occupant, and that occupant has now moved on. They've gone to Malaysia, they've gone bust, whatever it is, and the need is no longer there. So our job is as investors to work at, right, how can I bring, now that I've worked out what people are demanding, can I redevelop this building into this product that they're looking for? And then of course you're buying the product at a discount because nobody knows what to do with it, right? It was built for a manufacturing company or something and they're no longer there. So you can buy it at a discount. So yeah, I tend to work with people that are trying to do redevelopment or take on older buildings and then helping them develop it out. We don't do the work, obviously, but in terms of just helping them with design. And of course, the thing about um, that whole process is you've got finding the building is one thing, working out how to design it out for the optimal use is the next thing, actually having someone do the development work, and then, of course, is the operator. And the thing is, if you only know one of those things, how to do them, they have an impact on all the other parts. So you kind of need to have that holistic viewpoint of, right, if I'm going to operate a co-work, how does that affect the design? How
Yeah.
does that affect what building I'm buying? And how does it
Yeah.
affect the guy that's building it out?
Yep.
And they all have implications, don't they? So it's just trying to have that overview when people are starting to do these developments and help them through that process.
And that goes back to the why, because if your end use is right one thing, then especially if it's flexible office space, then you're looking at different factors on evaluating the space.
Yes. Yeah.
Um, so in your market, talk to me about demand for co-working sort of post pandemic. What what's the office environment, and then your 7 locations, sort of what's the sentiment on those in terms of,
Okay.
demand and what folks are looking for?
Okay. So co-working in general, I can't talk for the industry fully because we're only a little microcosm of the industry. But my understanding is that the city centres are still struggling a little bit, although the pendulum has come back a lot. The working from home thing is changing a little bit more to working near home, not necessarily working from home.
Yeah.
I mean, a lot of people that talked about working from home and are on LinkedIn singing its praises tend to be middle-aged, have a spare bedroom or an office in the house,
Totally. Yes.
you know what I mean. And it's
Yeah.
like the world's changed, the office is not coming back. It was actually some people don't have that luxury.
Yeah. 100%.
So we
Cultures don't have
found,
the luxury, right? There's a lot of, yes, when we think about our own personal
yeah,
situation, I
there's
think
a
you're
lot of
right.
assumptions there, isn't there?
Yeah.
So and the whole thing about training and all that stuff. But anyway, we found in our locations, depending on where they are, that co-working has changed slightly to the office being paid for by a head office. We most of our customers used to pay for their space, and then when COVID came along, that changed and some people went home and we maybe gained some other more resilient customers. But what's definitely interesting to observe is a lot more HR departments are involved in
Right.
choosing real estate, and that a lot of the invoices are not sent to the person in the room, they're now sent to head office somewhere. So that dynamic's changed a little bit, which has been interesting. But the general occupancy of our buildings has been close to 100% for at least 2 years. So post COVID, all our storage is full. I mean, it has been for 3 years, but our office space has, we lost some customers, not lots, but it's then filled up. So we've got one building we struggle because we haven't got any breakout space, which we're going to have to try and create. but the other buildings are all pretty well occupied, 100% late 90s.
When
You know, the
you say
market's strong for us.
no breakout, you mean mostly office space, not
Yeah, you go in that building. It's a nice building. I was talking to one of our team today about the fact that, you know, trying to get feedback from customers. And there was one that was wanting to move to another one of our locations. I was trying to tease out of them what's the difference.
high.
Said, well, the
Yeah.
building's really nice and modern. It's quite a nice space to work in, but I don't really see anybody. Whereas our other location, there's more energy and there's more community.
Mhm.
That the one that they want to move to. So you just like, all right, that it was. I think it was difficult for them to tease out the tangible
Yeah. Like,
thing.
what is it? Yeah.
Yeah, what is it? And because the building's got nice facilities, it's 2 stories. It's got T points on both floors, which I think is a mistake. We inherited that. I think you need one
One.
to
Okay.
force
Make 'em
people to
walk.
bump into
Yep.
each other, right?
Yep.
And there is no, apart from the 2 T points kitchens, there's no place to actually meet people apart from the corridor or maybe the toilets,
Yeah.
right? And so I think we need to create more collisions
Yeah.
in the nicest possible way between members so they actually get to
Still
know
get
each other.
more. There's so much tension in the model, right? I mean, you have 7 locations, so you look at 7 different pro formas and you build
Yes.
out the spaces. I think that is one of the big challenges. We talked, I think, right before we hit record about, my episode on third spaces. I think one of the challenges right now is the like the business model behind what consumers want,
Yeah.
right? Like that location, if it's full, is probably one of your most profitable buildings because it's so dense. I mean, assuming that it's a efficient space and you don't have like
It's not amazingly efficient, that
okay.
building. I think our average efficiency, gosh, right, I think it's about 76%,
Okay.
but we have some that are as low as 65.
Okay.
But that's because I'm not including the kind of the breakout space
Yep. Okay.
slash co-worky
Yeah.
business loungy area.
Okay.
And what, going on to the trends and stuff, one of the things that is an absolute is that people now are willing to take smaller units to have ability to access larger shared spaces.
Okay.
So our square foot rate is going up considerably in the buildings
Okay.
where we've more condensed,
Yep.
but we're providing all these other services and other spaces for people to meet
Amenitized
and
space.
greet. Yeah.
Okay. Yeah. So people want that blend. Okay. So that's great for your business model that you're because overall it's balancing out. Like
Yeah.
if you don't count that space as part of the efficiency, but you're getting a higher revenue rate on the
Sure.
yeah. So, but I think it is, especially for newer operators, hard to strike that balance around how
Yeah.
do you create a space that feels good and accomplishes, the interaction that you want, but also is profitable.
Absolutely. And one of the things that I talk to investors about is creating as much flexibility for themselves, not just for the customer. So going back to that design stage, when you're putting in your electrics and you're putting up stud work, make sure the electrics come up through the floor and don't run along the wall. So when you have to drop the wall to change the space, all you do is drop it, the electrics into a floor box. All the light switches are on the external walls or corridor walls, so you're not going to change them. The radiators are all on, it's just trying to design in flexibility so that when you build something out and you've done all your market research, you think, right, okay, I think I've got this right, but I need to have some flexibility here in case I've completely missed it. Because the last
Totally.
thing you want to do is develop out 10,000 square feet, open the doors, and you're like,
Yeah.
nobody's
Because
turning up.
you never know for sure. You can do all your due diligence and
Yeah.
really get a feel for the market and think you understand and then not quite get it right. Yeah.
And it's not just that, Jimmy, is it? Because, COVID came along, right? So, and the market changed. So you need to build in some flexibility into your physical structure
Yeah.
so that you can adapt when stuff like that comes along.
No, it's super smart. And because the folks you work with own, not lease, when you lease, it's expensive, it's worth it,
Sure,
it's
yeah.
it's complicated.
That's the challenge, yeah.
Yeah. I mean, so that's another sort of plus in the ownership model is if you have to make a change, it's for the long term and it's yours. It's your
Yeah,
investment, your return. Yeah. You're like, yes, I know. So
and
good.
I'm not going to be paying any dilapidations to take out my
Right.
fantastic space. Yeah,
Yeah. Yeah. I mean, yeah, it's yeah, anyway, we could go on and on about the benefits. Yeah, if I um could make it so, I think I would want everyone to do your model. I mean,
sure.
yeah.
But
Yeah.
right, I started in 2004. Okay, and you know
Wow.
I
That's when
so
you
I
bought the first space that was like the
yeah.
ooh,
So
early.
you know I have had other distractions,
Mhm.
but you know there are some other large operators that have come along in that time and opened up several hundred, if not
Yes,
thousands, of locations
I know.
because their model is different. They're
Have you
not doing
checked their
capital.
have you checked their stock price recently?
Yeah, well, I wasn't going to mention the name, but
Yeah,
you know, because the thing is, if you want to really scale fast, it's that capital intensity of buying buildings. That's the problem.
I know. No,
But
I
again, it comes back to
what do you
what
want?
is it you're trying to do in the first place? Yeah,
Right. What's
exactly.
your
Yeah,
goal? What are you trying to accomplish? But I do think it's well suited. My wish for operators who are in smaller markets where real estate is approachable to
yes,
consider it.
definitely.
Because I
Yeah,
think, to your point, maybe somebody who's done some residential real estate, but doesn't think of commercial. That's why I love your LinkedIn description. Doesn't think of it as approachable, and they don't realize like maybe the mortgage is the same that they'd pay in rent, or
sure.
right, maybe there are deals to be had. And there's more people than ever living in markets that are not, core
Yeah,
CBD. So
yeah.
it's a model to consider for people who are doing, a lifestyle sort of approach and not looking to, yeah, to IPO.
Yeah. Yeah. As
Yeah,
nice as that would be.
I know. So, yeah, what else do I want? So, yeah, I guess, I mean, this is what you do. I mean, you help, you coach. So for somebody who give us the 101 for somebody who's thinking about, or maybe isn't aware that commercial property could be for them. If you're having coffee with someone, you're not, giving them the whole like, coaching course. What would you say? What would you tell them to consider?
If they're looking at buying commercial or they're just
Yeah, if they're
think
like,
I've got a few £100,000 in my pocket, Jerry. What should I do with
exactly.
it?
Well, maybe they're passionate about maybe they come at it for my audience. They already have an interest in
Yeah, okay.
co-working and they're thinking about leasing, which is
Yeah.
right, more common here. What sort of bug would you put in their ear? Um
I yeah,
about buying?
I would ask the question, are you looking at building a trading business or long term do you want to invest in assets? Because the trading business is the day-to-day thing that makes it all work. But actually, if you're not doing the fundamental asset investing, you're not building up wealth
Yeah.
unless you can sell an IPO in your trading business, right? But the buying the commercial real estate allows you, particularly if you use good tax planning, allows you to build up a pot, shall we say, or an insurance that is there for the family as well. And it's important to make sure, though, that we're not blind to the fact that the purpose that we think the building can do today might not be the same in 2, 10 years, 20 years time. And it does have to have multiple exits. I think that's
Okay.
really important because sometimes you can buy a building and think, oh, this is perfect for, I don't know, self-storage or something.
Yeah.
And then 3 others open up down the road and you're like, okay, what am I going to do with it now? And if it's difficult to rezone it, what are you going to do? So yes, trying to make sure that you've got multiple exits on it. But I think that the piece that people don't understand about buying the commercial assets is the tax savings you can make and the incentives for doing it. You know, I appreciate UK and the US are different, and I always feel that we tax ourselves even more. But basically, there are a lot of tax benefits that aren't as obvious. Like just an example in the UK being, if you build a new building, you can get capital allowances, which you can offset against your initial profits. But if you're doing refurbishment, there's so much more that can go into those day-to-day expenses that actually will come off against profit, which means that you can really make profits for 1 or 2, 3, 4 years after you've built the development or redeveloped the property. And actually, who tells you that stuff? You
Yep.
know, but it is there. It's possible to do it once you get the right advisors. So anyway, I'm going slightly off track, but basically the fundamental thing is: are you trying to just do a trading business, or do you want to create wealth through investments?
Yeah, I love that. And thinking about sort of, I mean, along those same lines, I've been in conversations with folks who are trying to understand, like, what are the exit possibilities for co-working businesses? And there's not a lot.
Yeah,
It's like a typical business. It depends a lot on the lease, for example. So in the US and other
yeah,
markets, leasing is more common. It depends, the value of your lease and what is it going to look like when it renews is a pretty big factor in terms of the business
sure.
valuation. And even then, it's 3 to 5 times EBITDA, which, is okay, like, but is not
Yeah,
necessarily life-changing, for anybody with a few locations. And so if you have a why of building, long-term wealth and having, sort of a bigger outcome, then buying the asset and working it that way can be a better return than thinking you're going to build up this business and sell it for
yeah,
many
sure.
times,
Or even worse, hand the keys back. Yeah,
or even
because
worse.
yeah.
Right.
So
Yep.
um, it's interesting in the UK. I'm sure it's in the US, but in the UK, valuation is down to. I mean, there's loads of factors, but the main things that the valuers really look at when they're assessing your property for a bank or for somebody else that around the lease is based on obviously the income. That's like the number one thing, but the quality of the tenant. Now we can maybe come back to that because in co-working, the quality of the tenant
Yeah.
isn't always as good, and also the length of the tenant's agreement. Now, if you're the landlord and you're letting it out on a month by month basis, there's not a great value in that.
Right.
So there's ways to work around that, but you have to be aware that that does affect it. And then, of course, what they're trying to do is work out, well, as it is right now, what's the value going to be based on the total money, how long the money is going to be coming in for, and then the sort of the backup is the vacant possession. Actually, if this thing came back in the market, if you're a royal, not royal, if you're a finance company and you're saying, right, well, I'm going to lend you the money, but if it all goes up, what's the vacant possession value that underpins it? And those different valuations, some lenders will give you they're lending based on the vacant possession. Some will do it on the total income or the EBITDA. So there's different levers in there, some of which you can totally influence, right? And then others not so much. But in terms of investing in commercial, a good example would be buying something that's got either vacant possession or a partial income, which is what we tend to look for,
Yeah.
something with a partial income, because it kind of tells you that there's more space to develop.
Yeah.
And it also gives you an income that helps
Yeah.
raise finance. But when you do that, and then you redevelop the space, maybe re-gear the lease that's currently in place and put some more in, you've added income. And this is what I didn't realize on the first one was it totally changed the value.
Right.
And
When it came back.
generally where I am, the multiples around about 10 on the rent. And that varies wildly. Sometimes it's 20, sometimes it's 5, but 10 is kind of your vanilla products. I remember coming to the US and going to a trade show for self-storage industry. I'm amazed at the yields in that.
I'm
The
self-storage.
multiples there, yeah, man,
Yeah.
it's unbelievable. Yeah. But there's institutional investment. In the UK, we don't have that in self-storage yet. But I'm getting slightly off track. But basically, a multiple of 10 is kind of where you're looking at. Whereas if I was selling a small 7 unit co-working operations business, I wouldn't get a multiple any more than what you were talking about.
Right.
That's for sure. Yeah.
Exactly. Yeah. Okay. So if you want to buy another building, there's right, the building's half full
Yeah.
and you're going to redevelop it into co-working. What do you have to, do the banks understand what you're doing? Do the banks support what you're doing? Or do you have a hard time financing that project?
I we've generally bought one about every 2 years. and it changes every time we go to see them. So right now we're going through a refinance on some of our buildings, and the questions are different than last time. Their outlook is different than last time. But right now, the key things they're asking for is serviceability. So if you buy this building, Jerry, put it in your existing portfolio and it completely flops, can you still afford it?
Yep.
So that's the serviceability. But the second one is, what's the loan to value? How much are you putting in? We tend to leverage our existing, so we don't always have to put much in. We just keep our loan to values reasonably low as we can. And then, of course, the third part they're looking at is experience. And I think at the moment, if you go to the high street for a commercial loan for a multi-let building that's not performing well right now, it's difficult if you don't have experience. That's the bit they want to know about. If you've been leasing space already, and you've already got one or two locations, and now you think, you know what, I'm going to buy my own one, that experience will really help.
That's a chicken or egg problem for folks
Yeah, sure.
that are new. Yep. They're going to take you to the bank with them.
Do you know what? I don't know about in the US, but here, a lot more, and this is probably coming from my residential circles, but there's a lot more private finance. You know, people that are, and this, a lot of this is about your expectations. So if you have the expectation that there's no money out there, there's a lack of any kind of money to do anything, you're probably right for you. But if your expectation is there is lots of money out there, I've just got to get it directed towards me, and you go out with that feeling and that approach, then there's actually a lot of private investors out there that are willing to help people out.
Yeah.
But it's making the connection.
No, I love that. Yeah. I interviewed a couple that does co-warehousing. Is co-warehousing a thing where you are yet?
We've got one warehouse with 10 units in it, but
Okay.
all I would say is got a T point. It hasn't got any much else.
No, but it's you. I think you said this when we were recording. The importance of hospitality, and they talked about that a lot. And I think of co-warehousing as being a little grittier.
Yes.
Like very functional and gritty. And their location is downtown, which is not always going to happen because of real estate availability and whatnot. But they talked a lot about hospitality in terms of like how they support their members. I don't think they mean like because they have the best coffee in town and they're I think part of hospitality is in our industry is still figuring out like what does that look like, what does that mean, but really attentiveness to their members, understanding what they need, understanding what more they can provide, just being service oriented and friendly and connect, all the typical things. But they said they're really focusing on that for member retention even in that business. So
yes.
yeah.
You've just reminded me of something I should have brought up earlier on when you were talking about what do I see that's happening in the market. I think, because hospitality remind me of it, I think that what's happened in the restaurant industry is going to happen to us. And what I mean by that is that in the UK, a lot of the casual dining locations have closed up. The margins have become too tight.
Yep.
They've really struggled, and there's been some pretty high profile casualties in the UK. I'm sure it's probably the same in the US, where there's been some retraction. However, the high end and the functional end are both doing really well in restaurant spaces. And I think it's going to be exactly the same for us in our space, because the design element you're talking about and the hospitality and the creative and trying to really make the customer feel valued is definitely something people are willing to pay for. But equally, there is an audience that's not too bothered. They just need something functional. They just need to get the work done. But that middle bit's getting squeezed. And I think that's also why the other location that I was talking about earlier on is struggling, because we haven't been able to build in any kind of hospitality, and it's kind of that middle
just in
section.
the middle.
Yeah.
No, I like that insight. So I just went to Juicy in Chicago, which is one of the co-working conferences. And there was a lot of discussion about that, like more functional layer, which I have I think I think that business model is hard to figure out unless you are in the right market and hitting the right segment. Like to your
Yeah.
point, like I just need what I need. I'm just gonna pay, I'm in and out. I just want to, easy. So I don't see a lot of that yet. It's hard to staff it because it's probably not a big space. There's a lot of interesting things where it varies
I
for the
think
model. Yeah. What do you think?
I think though that you and I are more inclined to go towards the higher end,
Yeah.
partly because you feel it's more fun, but
Yeah.
also there is more of the hospitality and service element, whereas
Mhm.
the other end actually is probably more a landlord's sector.
Yeah. Yeah.
Because you're buying the building, redeveloping it, but the operations side of that fourth
Lighter.
bit is not so important.
Yep.
So it tends to be, I mean, they want light touch,
Yep.
right? So, but what they do like from what we offer in our sort of the more high end is they like the flexibility, they like everything included, but they just like to be left alone.
But yeah, right. Exactly. Are you leaning into anything that's more operationally intensive around like food and beverage, besides your
uh,
your tea point?
Yeah, so well, one building we have got. I mean, I was listening to your podcast about third location and a third
Mhm.
place, and I thought that was really interesting. And we have got a building that's got a restaurant in it, which we operate. But the challenge is it's too small a building to support the restaurant, so it's pretty much supported by a local community, which is
Yeah.
fickle. And you've got so really it's ended up being pretty much a separate entity. So although I'd like to say we're in that kind of food and bev hospitality, we are, but not really within our buildings. You definitely need a certain size, I think, to make that work
Yeah.
because you need consistent customer. I
Yeah.
mean, what I would love to do is have a food and bev operation that actually didn't need any external customers. There was enough critical mass to support it on site because
Yeah.
then everything changes, right?
Yeah. Agreed. Very hard.
Very difficult, and the
Yeah.
skill you need. But interestingly, doing up the older buildings, because I like particularly buying older, but like 200-year-old buildings where you've got loads of character, is that when
There are
you
no 200. I don't know if there are any 200
of
buildings in
course there
San
are.
Francisco.
I was just thinking a couple of the ones that we bought are 200 odd years old, but basically they're stone built, and over the years they've had loads of layers and things put in them, and they don't look great. But when you strip all that out, it can become really inspirational. Actually, I did pick up some really interesting what you said earlier previously, was that it's not always about inspirational spaces, it's about energizing spaces, which I thought was a really good comment. And these not industrial, semi-industrial, but these older buildings, they just have so much great character that they kind of give everybody a bit of a grounding, but equally they're just uplifting places to work in. But the thing is, because they've often been built for different things, you'll have spaces that can be quite voluminous. So you can have a venue type space or a co-work or whatever different guys it has depending on what time of the day it is, and all the private offices. So that mix, when you've got enough scale, is just fantastic because it's so sticky for customers.
Totally.
Once they've come in,
Yep.
that it's like, does anybody else offer anything like this?
Yeah. Yep.
Not really. I don't want to move.
Yep.
All
Yeah.
feeds into marketing, doesn't it?
Yeah. I mean, but it's also just more, there's a lot of complexity. That's what I, think is a little bit ahead of us so I do like what you're saying that there's a segment and we'll see this play out that's less, lower touch, simpler. That's a
Yeah.
model that's approachable to more people. The really high touch, high hospitality, high amenities, food and beverage, like, oof.
That's a
That's
proper
hard.
business.
That's a
That's
proper
hard.
business.
And
Yeah.
yeah, and you need,
Think
yeah,
passive about that business.
I need to let investors know that is a trading business.
Yeah.
It's
Yep.
fun, teaches you a lot of stuff. But the fundamental at the end of the day is still we're in the space business and we're about making space either create more margin than we're having to pay out to the landlord, or obviously more margin we're having to pay for our mortgage. And it could be that the space use is totally different in different buildings because you're trying to optimize for what that local market demand is.
Yeah. Yeah.
Yeah, but I guess for me, I just love the creativity of it all.
You have to like the creativity.
Yes.
Right. How do we solve this challenge? Okay, tell us a little bit about what you do in your programs. So you have you have a membership, you've got a mastermind, you do some one-on-one mentoring. Tell me about how you work with folks who,
Okay. All right. So
yeah,
I started my podcast for 3 different reasons. One, to get more exposure and meeting more interesting people in the industry, yourself included, right? So just being able to meet other people and learn more. The second one was to build a network of people that are actually investing in commercial property, because it's quite challenging to find other people that are doing it and willing to talk about it. And then the third one was to find potential opportunities, either buildings or people to work with in terms of finance too. So that was kind of what I was trying to do with it. What it's ended up doing is creating this audience saying, well, actually, Jerry, can you tell me how to do this?
right.
Or you've done this. What do you think about, yeah, right. What do you think about that? And as much as I like working with individuals, because you get into the nuts and bolts about buildings, is the frustrating thing about that is you're not, it's not the same as working with a group, because when you're working with a group, there's that whole peer-to-peer stuff going on. So it's not all about you or I. It's about what everybody else has learned and sharing and everything else. And then I can learn more selfishly.
Mhm.
And you've got this peer network who are supporting each other, going through different problems, bringing different challenges. You can learn so much faster. Whereas when you're looking at one building and doing one-to-one, you're only really learning that two-dimensional way.
Yep.
So I really like doing masterminds and the membership group. That's the bit I really enjoy, because the membership group, although most of it's online, we do meet once a quarter for those that can come. I mean, we do it online as well. And then that's for a full day. And then on the masterminds, a bit more intense. That's for people who actually really want to do this. They've probably bought a building already. They're
Okay.
looking at scaling up. And it's more about accountability, 90-day planning, and being just a little bit more, I guess, focused on making things happen. So it's quite interesting, because I've been on a couple of masterminds myself. I've tried a different couple of things and improved on what I think I've thought. Rephrase that, Jerry. I've taken some bits and pieces from other people's that I thought, actually, if I did that on
Yep.
my own and maybe wrapped it in this, it's going to work better, at least for me. And during that experimenting, I've discovered that this approach that we're at right now, with an ongoing mastermind with the accountability sessions, is really the bit that people are after. Yeah, they want the knowledge, but it's that thing about, actually, once all the enthusiasm's died down, who's there to help actually make sure this stuff happens?
Yeah. Yeah.
So that's where we're at the moment. I'm sure it'll change a little bit again, but
Totally.
I'm really enjoying the group stuff. That's the bit I really like.
Yeah. Do you find sometimes people are resistant to do the group, even though you know it's better?
Sure, yeah,
Yeah.
absolutely, yeah, definitely. And and you know, at the end of the day, I do some one-to-one stuff, but yeah, I try and steer them towards the group. I just think that the only time that's slightly different is when they have a very specific building they're buying.
Yeah.
And it's like, right, I've got this deal, I need to make this happen. And then it's just going through the analysis and everything on the specifics of that. That's a little bit different.
Do you get female investors in your groups?
Yes. Do you know what? I've been really lucky, because in our masterminds, let me just think now. Because we were doing 9 months, now we just do continuous, but the last 9 months, I think there was more females than males.
Oh, I love this. Okay.
And the previous one was 50-50.
Oh, good. Okay.
So
I'm surprised.
yeah,
So I
I
love
am
that.
too. And actually, when I look at our podcast listeners, I'm disappointed, because according to the stats, how the hell they work all these things out, there is a less proportion of females that are listening.
Interesting. But
But
they
it seems to me that the
they're happy
females
to
are the
ask
ones that are
for help.
taking action.
Right. And know they want, like, they don't want to make a bunch of mistakes. Yeah, they want to do
Yeah,
it.
and maybe the guys are thinking, do you know what? I've already done
I got
residential. I'm not going to listen to you, Jerry. Yeah.
it.
Well,
Yeah.
I'll listen in private, but I'm not going to tell you I'm listening.
That could be the case. Yeah, I have to sign up for your co-working stats. Cool. Okay, I'm going to put your website in the show notes so that if folks want to see
Great,
what
thank you. Appreciate that.
yeah, they can learn more about that. Yeah, anything else we should cover before we wrap up?
I don't know. I'm trying to think. Not for my stuff. Funnily enough, I was speaking to somebody from California yesterday.
Oh, where in
Who's,
California?
oh, I can't remember. That's as much as my geography goes. He's to be fair though, he's wanting to invest in the UK. So it's like, okay, all right,
Really?
let's have a conversation. Yeah. He's got ties over here.
Oh, okay.
So, but it's not. I mean, there's also I've worked with people from Hong Kong, some in France. You know, the geography doesn't matter too much because the underlying principles are the same, right?
No, 100%. Yes.
There's
Yes.
technicalities, but I'm not a lawyer,
Yeah.
right? So I'm not going to be able to give you as good as a lawyer, but the fundamentals of how to find space
Yeah.
and work out what the market wants is the same everywhere.
Yeah. And then you just find a local team. So if you need
Yeah.
yeah, just like in residential, you can do long distance. I think most people in California invested in another market. Yeah, commercial real estate.
Probably, yeah.
Yeah. Anyway, thank you for making the time to do this. Let's do this again, not in less than 2 years.
Yeah. Okay. Deal.
Yeah. And so I'll link to your website and your podcast because anybody who's listening who's interested in potential investing should listen to your podcast. So we'll link that up and we'll do this again soon.
Fantastic. Thanks, Jamie. It's been real good fun.